Good morning, everyone. This is Shivani Shinde, and today we have with us C Vijayakumar, MD and CEO of HCL Technologies, discussing the quarter three performance of the company. In terms of growth, the company has been the best among the top four players, growing 7.6% on constant currency basis sequentially. Though the net profit performance was pulled down due to supply side constraint, the impact of which is evident in today's stock market, which is almost down 5%. Okay, so CVK, as I said, quarter three is has been one of the best quarters for HCL in 12 years, in terms of the growth rate as well as the deal wins that you said. Could you give us some more color? What was so different about this quarter? And also, if you could give us some color on the TCVs that you have won, $2.13 billion. If you could give us what's driving that as well.
Shivani, thank you for this question. And if I just lay out the quarter, as you know, we have three segments. One is our IT services, then the engineering and R&D services, and products and platform. All three segments did extremely well in this quarter. Of course, engineering and R&D services grew 8.3% sequentially and close to 20% year on year. And products and platform, being a seasonally strong quarter, grew 25% quarter on quarter and 8% year on year. And the largest segment, which is IT services, also grew quite well, 4% plus. So all three did very well. And the services business is doing 5.3% on the back of 5.2% in the previous quarter. So that's a strong performance. In terms of geographies and verticals, all the geographies and verticals did very well. In terms of sequential growth, the tech sector, telecom, media, entertainment, retail, CPG, all of them grew double digits sequentially, and life sciences grew close to 20% year on year. So that's the broad summary of where the growth came from. Then coming to bookings, we had a $2.1 billion booking. This consists of 8 large deals on the services side and 8 significant deals on the product side. This is in life sciences, financial services, manufacturing, telecom, all of that contributed to this deals. Mix of large deals and mid-sized deals and small deals in this $2.1 billion win. And the other highlights of the quarter is hiring continues to be strong. 10,000 plus people we hired, net hiring. So which is again after 11,000 in the previous quarter. Our margins were flat, 19% in the previous quarter and 19% in this quarter. There's a much higher margin on the product side and a lower margin on the services side. And that is largely due to some of the incremental hiring that we've been doing and freshers and some new project ramp-ups, some good costs that we are incurring to ensure that the growth momentum continues.
One of the highlights of this quarter is obviously, as you said, the products and platform, almost 24% sequential growth. Do we see the softness that we saw in this particular segment over the last 3 quarters? Do we see that has tapered down? Or is it going to be one of those, cyclical play where Q3 will be traditionally really strong for products and platform, and the other quarters are going to be softer?
Yeah, I think that's true. This business is always going to see the peak in Q4 because a lot of them are perpetual licenses of software products. And maybe over a period of time, they will get converted into term licenses and subscription. Already there is a significant part of these licenses which are software subscriptions where you will see some kind of a stable and then growing kind of annuity base. But at least in the foreseeable future, next couple of years, you're going to see this seasonality in this business.
So that's going to be. But do you think that the TCVs that you have, and if you look at the next, if you have to look at the fiscal year again, growth will. There's enough out there in terms of driving the growth for the company. If you look at if products and platform is going to be cyclical like this.
Yeah, I think products and platform will have very modest growth. We said 0 to 1%, maybe it will be in that range. But services business is very strong given the overall momentum and the net hiring numbers, all the booking numbers, and the pipeline, and all the client conversations. Everything gives us confidence that the growth is going to be a long-term story.
Right. CVK, the other point which you said, the supply side constraints. Now, if I have to compare HCL Tech with the other peers, the supply side constraint impact on margins or even on the net profit is significantly higher. Even if we take out the taxation part, which kind of pulled down the profits for this quarter, it's still 4.7% down. Could you tell us what's happening here and how do you intend to get your margins back? And is there enough headroom, if I have to
Yeah.
say, going for the next quarter?
Yeah, certainly. I think since we've had very strong growth on 2 consecutive quarters on the services side, which is 5% plus, which is again a record kind of growth in the last 2 quarters. And there is also a lot of ramp up of fresh talent. We had 22,000 people planned. We've already hired 15,000. A significant number of them are still under training. So they will get into billable roles soon. And then when there is attrition, there is a backfill cost. Given the current talent supply situation, those costs have been higher. But we believe there are 3 levers for us to improve margins. One is, of course, the freshers who are under training will get into billing, and we will continue to add more freshers. In fact, next year we plan to double the fresher headcount. The second one is, of course, to get rate increases. If you look at our attrition in the team leads and above and the specialists, it's very low. It's sub 13%. So we believe for higher skills, we are going to get much better rates from our clients. That is something we've initiated, and that's going to be a long-term journey to get the rate corrections. And the third is, as the volumes pick up, I mean, there is going to be some scale benefit. We already saw, like SG&A had a 60 basis points improvement in the last quarter to this quarter. So there is going to be some scale benefit of the investments that we've made in some new geographies and the overall scaling of the business. I think with these 3 levers, we feel pretty confident in 2-3 quarters. Our services margin will improve for sure. So.
Right. Do you see the supply side constraint tapering down in the next few quarters? What's the sense that you're getting from the market?
I think it's going to be, at least next couple of quarters will be tight. After that, it should moderate because there is a lot of fresh talent across the world coming into the workforce, and they're getting trained. And I think once they come into very active contribution in terms of their work, it should moderate.
And the other aspect which we heard during the press conference was how you're getting into newer geographies for talent.
Yeah.
Now in India also you're getting into smaller cities. There are international geographies also. Now one of the trends that we've seen in India per se, especially with companies now going into tier 2, tier 3 kind of cities, even attrition there have kind of spiked up because there's so many offers going around. How are you? Do you think this strategy is also going to not backfire in terms of inching up the attrition? What's your take on that?
Yeah, I think, of course, that phenomenon is something which we are seeing across all locations. Attrition is going up. I think a lot more emphasis on training and upskilling talent, getting them to get trained and then deliver higher order work. I think that's where the real trick is. And we're continuing to invest a lot in reskilling and upskilling across every part of our business all over the world.
Right. The other aspect that we've heard again from the peers as well, deal sizes are getting smaller. So 2 questions here. One, if you can define how HCL describes large deals, because you've won 8 large deals. Also, do we see that these mega deals that we used to see, are they off the table because deals are getting smaller, or is it just a temporary phenomena?
No, I think, see, the pipeline has a good mix of large deals and mid-sized and small deals. And we call out $25 million and above as large deals in this. So 8 deals had 25 million. There were a couple of 100 million plus deals as well in the last quarter. And I think it's a good mix. We do have large deals in the pipeline, and I think it's a balanced mix, a little bit skewed towards smaller deals, I would say.
Does that mean competition just becomes really toughen up because everybody wants to? You're
See,
not
I
dealing
think a
with the.
lot depends on your ability to deliver consistently and deliver quickly. I think there is a lot of premium customers are putting on execution, and because a lot of companies they pick up business, but because of the current challenges in talent situation, their ability to fulfill in a timely manner is something which is under stress. So I think with a little more proactive planning and with a long-term view, one would be able to address it well, and that's really what we are doing.
Right, right. CVK, as I said, quarter three is done. We are there. We are already in quarter four. Start of the year is when clients want to ideally discuss their spends. What's the sense you are getting? If I have to get some color in terms of the spend cycles that you are seeing for calendar year 22, and also in terms of deals, do we continue to see these smaller deals that will be, as you said, the bulk that will be coming around, and if you could share some of the trends that you see among your customer.
See, one is in all our existing customers, we are continuing to see a lot of incremental work on various areas where they want to modernize digital engineering, data modernization, cloud transformation. All of that is coming in an incremental way. And then there is a lot of activity in our hyperscaler ecosystem. We have hyperscaler business units for Google, Microsoft, AWS, IBM, and many others. So as a part of the go-to-market strategies with our hyperscalers, we are seeing some good momentum. There are a lot of clients who are migrating to different hyperscalers, and then we become the services partner in migration and managed services for those clients. So that's a good trajectory. And as I see the year ahead, I do think the spend is going to increase on tech. That's the broad theme. Every industry is leveraging technology a lot more. So the tech spend is only going to increase. And that's going to augur well for service providers like us.
Right. One final one from my side. India has also been talking about, I mean, if you look at even the enterprise segment, the adoption of digital has been going up. What's going to be the strategy of HCL? How do you see the India market panning out for you? Is it going to be a significant play for you as well going ahead?
Yes, I think India has multiple dimensions. One is there are some significant clients for our product business in India market. So we continue to strengthen that and expand it. And there is, of course, a lot of activity in the captive centers, which global clients have. There is a significant demand for some of the projects which are getting delivered from the captive centers. At least these two areas are pretty strong focus areas for us, and that will continue.
Right. JVK, on the acquisition that you did in the ENRD space, which is also going pretty strong for HCL, do we see similar acquisitions? And also, if you could give some color in the ENRD space, which is kind of gaining momentum, even if you see globally the kind of acquisitions that we have seen in this space. So what's driving that?
Yeah, this is a very strong service line for us. 3 quarters sequentially, we've grown 4%, 5.5%, now 8.3%. So there is a lot of momentum in our engineering and R&D services. Of course, there is the momentum is largely driven by digital engineering, which is telecom modernization and softwareization and data engineering. In some areas, we wanted to acquire some additional capabilities, and especially Eastern European presence in Hungary. So that's what Star Schema is bringing to the table. They have a very high-end consulting capability in data engineering space, which is what a lot of our clients, which are engineering and R&D services serve. They need those capabilities. So that's really the strategic rationale for this acquisition.
Awesome, CVK. Thanks so much for your time. Really nice, and hope to meet you in future.
Yeah, sure. Thank you, Shivani. Have a good day.
Thank you.
Bye.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.